Have you ever felt like the market is hunting your stop loss? Like every time you literally take a trade, the market would come, hit your stop loss, and then move in the direction that you forecasted or predicted. Well, I've been trading for 8 years and exactly the same thing used to happen to me. You know, I'm not saying it doesn't happen at all anymore, but it used to happen to me so many times where I felt like the market literally chased my stop loss and then went to my target. Now that is called liquidity. And I discovered liquidity about 2.5, 3 years ago, and it changed everything in my trading. In this video, I'm quickly going to explain as short as possible what liquidity is and how it works. Let's jump onto the charts. I want you to see liquidity as an area where most retail traders are placing their stop losses. So liquidity is always resting above and below swing highs and swing lows. For example, every time the market swings, for example, it changes direction, you know that liquidity is then resting in that area. So you know that most people are continuously selling over here and they're buying at these lows. Now, what tends to happen is you would, for example, let's say you call this a support line. You would like to buy over here and you'd place your stop loss below the most recent support, for example. And now what would happen is liquidity would attract the market to come down, take your stop losses out, and then move in the direction you wanted to move in. And exactly the same to the downside. So for example, let's say it moves up and there's liquidity resting over here. You would probably jump into the market and the market would then continue up, take out all the stop losses resting there, and then move in the opposite direction. So let's quickly look at a live example on the charts. So here's a live example where you can see buyers were jumping in over here, over there, and over there. Now, each time buyers are jumping in the market, they are probably placing their stop losses in the larger area where the range is. So all the stop losses are resting over there. And as you can see, if you bought over there, the market would literally come down, take you out, and then move in the direction you wanted it to move in. And then there's liquidity resting over there. The market would come up, take out that resting liquidity, and move in the opposite direction.